Welcome back to another exciting edition of Light Beer, Dark Money. I'm your humble host, Chris Clements, and this is not Sean Noble sitting next to me. It's my good friend Jake Duffy from the Duffy Matthias group. Thanks for coming on today.
Absolutely. Thanks.
Sean is in a location unknown, sequestered somewhere. No, he's probably doing his big High Rocks event this weekend. He's traveling. So thank you for coming on. This is your first podcast.
It's my very first one.
Yeah. So are you a little nervous?
A little bit. Yeah.
You had to get like high level clearance to come on here, right?
Yes. Yeah, you could say that. I guess I didn't really know what to expect. This is a big studio. It's actually I didn't even know this was here.
This is great. I mean, Dave Pratt.
Cool.
Yeah. Are you familiar with Dave?
I am. Yeah.
I mean, he's a giant.
Mm-hmm.
I mean, we would not be here without Dave.
Yeah, this is amazing. This is a great studio.
And Robin and everybody. So,
Yeah.
I mean, make yourself comfortable. We're just amongst friends here. But thank you so much for coming on. You and I have had a relationship over the last several years. And I asked you to come on because there's so much happening right now within the markets. And your business is wealth management with the Duffy Matthias Group. And you and I have always had a really great relationship talking about the markets, talking about what's going on economically, and certainly it's on the top of everyone's mind in terms of what's happening economically right now. The GDP numbers just came out yesterday. They weren't as robust. I mean, and even predicted, they were kind of right on the nose. People are spending it different ways. What's your take?
Well, that's a great question. And this is my personal opinion.
Sure.
And if you dive into the numbers, they don't look really as dour as what I think the surface.
That's what I was
numbers.
thinking.
Yeah. I mean, actually, just really diving into the numbers, what brought that GDP number down was the net exports.
Sure.
And that was it was a detractor of about 4.83%, which is that's a big number.
Yeah.
And the other parts of it, government spending, that was down a little bit. Maybe the effects of DOGE and the efforts that they have going on there. But when you look at inventories, that was up probably due to the net export number. Companies
businesses are like hedging a little bit.
Yeah, they're getting ahead of the potential tariffs and the unknown there with the impact. So they built up some inventories. But residential investment was up, business investment was up. Then you had PCE. The big number there that I thought was interesting is in business investment. We saw a 22.5% increase.
Yeah.
In the quarter, which is
this is why I like having guys like you on, because I think we see things in much the same way. I dove into those numbers. The Wall Street Journal is saying that the sky is falling, and some other commentators, especially on the right, are saying the same thing. The left is sort of rejoicing in some ways, saying, "Oh, look at this! The economy is heading into a recession." But when you dive into those numbers and you see two numbers that really caught my attention, and that is what you touched on, the federal spending and the state spending has moderated as well.
Yeah.
And the business investment numbers, if those are the beginning of long-term trends, we're going to be fine.
Right. I guess, the question with that is how much of that was in that net export number too as well.
Yeah.
But as an investment, that's a big deal for future growth.
Yeah,
right?
For sure.
So this quarter will be interesting to look at. I don't think that you're going to see, personally, I don't think that you'll see the net exports be that big of a draw on GDP. So you'll see that go down a lot because that was pulled forward already. Mm-hmm. Government spending, that could come down quite a bit more. I think if you look at the effects of DOGE and some of the success that it does appear that they're having there. I mean, if you dive into numbers for businesses that have been coming out with earnings here recently, I noticed that IBM had noted that they had 15 or so contracts roughly that were either canceled or cut due to some of the effects of DOGE. I think that's what I read. It was roughly around 15. But in any case, you're seeing government spending come down a little bit, which I do think is net positive over the long haul.
Yeah, it's we like to joke on the show that you never lose your job in Washington for increasing spending or cutting taxes. It's always the other way around.
Yeah, they're spending a lot of money, right? And so, for them to start bringing that down a little bit, I think it's reasonable to think that some of the benefits from DOGE would be to get rid of a lot of the wasteful spending.
Yeah, well, they had a cabinet meeting, I think, yesterday, and which is more cabinet meetings than they had in the last administration completely. And the DOGE report, they've been talking about doing $1 trillion in savings and what have you. I think that number is still attainable if the Congress goes back and actually, solidifies a lot of these cuts and dives into the budget numbers. They're claiming $200 billion in savings thus far, which for the first 3 months is better than what we've seen in the past. And that's a great long-term trend, do you think?
Oh, absolutely. Actually, if you look at, from what I was reading, the planned debt issuance from the Treasury had just been modified down over $50 billion. And so you saw, at least in the markets, you saw rates kind of come down a little bit because they're not going to need to issue as much debt. I think that's a net positive for the dollar. We did see the dollar strengthen a little bit, but my personal opinion is that that some of the benefits from DOGE may come where the dollar strengthens a bit, over the next year and stops weakening. I think the knee-jerk reaction to the tariffs and seeing the dollar go down, that will probably be tempered by really identifying where the wasteful spending is and making those cuts, and then having Congress go and make it law.
Yeah, I think if you're able to arrest inflation in terms of not having so much money chasing so few goods in terms of government spending, get a handle on energy prices, start baby drill, start producing more of our own energy, not relying on other countries, and then resourcing a lot of our manufacturing here over time. I think that's overall good for the economy. I mean, and then maybe even creating I've been talking about it on the show for a while, is will Congress have the wherewithal and the political gumption to create a new budget baseline and go back, rather than spending $7 trillion, being able to spend $5 trillion, which is about where we were in 2019, adjusted for inflation.
Yeah.
So, I mean, that would be tremendous. I don't know if they have the political will to do it.
I don't know if they have the political will to do it, but, every little bit right now helps, and it gets the ball rolling, in the right direction.
Yeah. In your industry, how are you advising or looking at the extension, solidification of the Trump tax cuts in 2017?
How are we advising around
I mean,
that,
how do you see it? Do you are from a forward-looking basis? Do you expect those to be reenacted? You expect Congress to do their job? Are you seeing any data where there's some pricing that might not happen?
I haven't seen any data that suggests that wouldn't happen, and we're not speculating on that really or around that. But I would say that the indicators probably suggest that it would continue, that it would pass, and that there might be some modifications to it. Would be my guess. If you read the statements that are coming out of the White House, it sounds like they want to do a few other things in addition to that, right? So it might be even more robust than the previous version.
Yeah.
So that'd be my guess.
Yeah, my sense. I mean, they've now extended the deadline. I guess Scott Besson said to July 4th, which is interesting versus Memorial Weekend.
Right.
So that just indicates they have a lot more horse trading to do between now and then.
Yeah.
I have felt for a long time that they have to get this done. I mean, I think the entire presidency sort of hinges on getting it done. I would have preferred that they tackled the tax issue first before he jumped full into tariffs.
Yeah, although I think that part of what they're thinking is, and this again my opinion, but I think that they're thinking that if they have some success in these tariffs, that then they could go for a bigger ask on the tax cuts, and so maybe make a more robust package based upon the benefits that they get from any type of a tariff that ends up sticking, or benefits from trade agreements that we end up solidifying between now and then. So my guess is that they are looking to have some real solid numbers that they can project in there,
and then point to.
Yeah, and then they could make some bigger cuts that are paid for, right?
Sure.
I mean, because that's the whole thing is it paid for or not? And
as a conservative, in my opinion, that's sort of a misnomer. Because it's every dime of a tax decrease sees an exponential increase in revenue for the federal government. It's paid for because it's paid for in growth, and to the extent that they can actually make some real cuts in both federal employment and also waste, fraud, and abuse, which, as you mentioned, is DOGE. That would be great.
I think, the key is getting the deficit spending down, so that it's at a sustainable level where we could actually grow our way out of it. It's hard because really what I see them trying to tackle two different things. They call it the twin deficits, right? Which is the trade deficit and then the fiscal deficit. And the trade deficit it's a hard thing to tackle. I mean, we buy a lot of foreign goods, and a lot of goods are made overseas now. I think that, trying to reshore some of those things that are manufactured overseas from a national security standpoint probably makes sense, right?
Yeah.
Where we have a better predictable supply for businesses. And we found out that, in COVID, that where the supply chains had their kinks, right? So,
well, certainly on the semiconductor side, that's full speed ahead in trying to get that sourced here.
Right. And that'll take time.
Yeah, that takes a lot of time. We're seeing the benefits of that here in the state of Arizona, but before all that capacity comes online, it's going to be some time.
Right, and then we need to see how successful those plants are.
Yeah.
Right, because they just built, I think, their second one. Is that right? Or they built one and then they just, I think, completed the second one, or they're about to. And
Intel has not stopped expanding. And now we have the Taiwanese building. I mean, I don't even think that's completely come online yet, and now they're already expanding it.
Right.
So, which is tremendous, but a lot of that capacity will take some time.
Absolutely, it'll take a long time.
Yeah.
I mean, years. Right?
Years, if not decades.
That's right.
The other side is on the pharmaceutical side. To your point about national security, and so many of our pharmaceuticals that a lot of people don't know are made in China.
Yeah,
and so we're beholden to them on that, and we saw that during the pandemic.
So again, I think this kind of goes back to how do you tackle that, and try to bring that back, reshoring, if you will, that part of the supply chain, and so I think they're trying to tackle that right now, with the fiscal deficit, doing that at the same time, it's messy. We're watching sausage being made, and it's.
Well, we're trying to reorient.
Yeah.
I made this comment to a friend of ours this morning. We're trying to reorient an economy and a trade structure that's existed since the end of World War II.
Right.
I mean, especially when it comes to the Europeans, and also reorient a security structure that has existed from that time. I mean, Trump is really pushing on the Europeans stepping up and providing for their own defense. I randomly this morning looked up how many military operations or installations even that we have in Germany. How many we have?
No.
119.
Wow.
119. We have 119 in Germany. We have 119 in Japan. We have 79 in South Korea. 35,000 people are in Germany.
Wow.
So when Trump starts saying, they've been ripping us off or they've been taken advantage of, those are the things that I believe he needs to explain more.
Right.
Like, what does that look like? And why do we need to reorient this to make it more fair? Because at the same time, we've been charging a 2.5% tariff to many members of the EU, and we've been getting charged 10, 20%, especially in Germany. And we're a big part of their economies.
Right. Yeah. From what I've read too, it's, especially on autos, it could be 30%.
Oh, it's crazy.
So you go to Europe, you don't see a lot of entry level, American-made cars, but you go to the U.S. and you see, every automaker's got entry level cars here, and it's not, really, they can't afford our cars at an entry level price when you have such a high tariff over there. So they just don't buy them. We don't even sell them there.
Yeah. No, you can't. I mean, I'm a broken record to our listeners, but you only recently could you import an F-150 into Germany.
I didn't know that.
Yeah, 2022. Finally, there's an importer that will bring it in, but for years you could not get one. It's the number one vehicle here in America.
Right.
Number one selling vehicle in America. You can't buy it anywhere else in the world. That's what I believe what we're fighting for here, and hopefully that's what the focus is, opening up other markets to paramount American goods.
Yeah, I think you're right. I mean, I think that's what they're trying to do, and it's just messy. It's messy right now,
to where we're treated fairly. That's what everybody wants.
Right. So there's a lot of headline risk out there right now.
Yeah,
and that's why if you
that's a good point.
You look at stocks, it's like whack-a-mole. They could be up 10% one day, down 10% the next, and it's just
depending on who spoke.
Yeah, and it's
if the we were talking about this theory the other day. If the Treasury Secretary is out there speaking, the markets ease and they go up. If Peter Navarro is out there speaking, they tank.
Well, Besson's very good.
Yes, he's tremendous.
And I think he's one of the smartest guys in the room. And we're lucky to have him, I do think, in that position. But it's interesting because right when Trump, took over and he got into office, he did do a bunch of deregulating, and signed a lot of executive orders that overturned executive orders that had overturned the deregulation that he did, the first go around, right? And so the way I kind of liken it is that, coming out of the Obama era into Trump, 1.0, our economy was kind of like a plow horse at the time, and he kind of took the reins off, and it became more of a stallion. I mean, the economy started to perform well, and then, when Biden took over in 2020, he put the reins back on.
100,000 pages in the Federal Register. He expanded it.
More regulations.
Yeah.
And so, the stallion became a plow horse again. And
that's a great analogy.
And then, Trump 2.0, he comes back on the scene and he deregulates and tries to, turn it back into a stallion, if you will. And it does take time. But before we could even get a dividend check from the benefit of that, they do the tariffs part. And so, the deregulatory part that's a big deal.
Yes.
And
I'm glad you brought that up.
It's a huge positive for the economy in terms of getting things done, in terms of greasing the wheel, if you will, so that it's easier to do business, and it's easier for businesses to hire people, and to spend money and to get business done, right?
Yes.
And so, I think there's a big net positive from that we hadn't even seen yet. and then we have the tariff stuff come on. So that, you know, it's confusing because the tariff stuff, it's tough for businesses right now to really know, you know, what
in terms
to
of
expect.
planning,
In terms of planning,
yeah.
you know, so
That's why you see the inventory levels the way they are.
that's right. And some businesses probably didn't think that they were going to be impacted as much as they probably are.
Mm-hmm.
And then some, you know, probably are finding out that they're being, you know, the impact's going to be less. In this type of a situation, though, you know, you're going to have casualties, you know, and it's tough to know exactly where they are. Now, for a short period of time, you know, until things get worked out.
Yeah.
I don't think that this is a long-term thing in terms of the uncertainty around it, you know. I think that by next year, they want to be moving on and talking about other things in the economy moving forward. And you know, I don't think we're in a recession right now.
Yeah. What are your thoughts on the prognosticators, you know, saying that we're going to have a recession in 6 months or whatever, or that the GDP numbers show that we're lurching towards one? I didn't read them that way.
Well, I didn't read that way either, but you know, consumer sentiment has gone down quite a bit here recently. Yeah. So that's something that I'll be watching, that and the employment numbers, because that'll kind of be a tell of whether or not we do potentially dip into a recession. You know, we bought all this inventory, right? We pulled forward with buying all these imports.
Yeah.
But if consumer sentiment drops, you know, and people don't spend money on buying that inventory, then that could create some problems, right? So I don't see it right now in the numbers. If you look at even real estate numbers were up month over month. You know, residential, that is. I don't see us going into a recession right now.
Yeah.
You know, and frankly, I don't think that that's the goal of the administration either. You know?
No, so. Obviously not. I mean, that would torpedo everything else they're trying to do.
Yeah, but you know, it's hard to know what the impact of government spending is going to have on that number too as well. So we saw a detraction of roughly about 0.3% in the last GDP number. You know, if that picks up steam and we see, you know, the government spending tick down quite a bit more from that, it's tough to know if that won't give us an illusion that there is more of a recession as well.
Well, that's an interesting point. I think the point that Trump is trying to make, even with the markets and since he took over, is that, you know, government spending has propped up this economy for years, mm-hmm. and you've actually had a lot of cash, a lot of investment opportunity on the sideline, on the business side. The businesses really have not grown. Mm-hmm. They've sort of hedged their bets and waited, and now he wants to unleash business growth.
Right.
And so I think you're seeing that in the business investment piece.
Yeah.
Seeing that in some of the consumer pieces, and maybe even some of the inventory pieces as well.
Well, I do think on the investment, the business investment piece, that we could see that pick up even further once there's, you know, at least some stability around what businesses can plan for.
Well, and certainly I think that has a lot to do with the tax bill.
Right.
Once a lot of the business goodies in there, in terms of, you know, the business taxes, the corporate taxes, if those stay the same or go down, accelerated depreciation, if that stays or maybe mm-hmm. is even enriched. Mm-hmm. Other things that small businesses rely on, expansion of death tax benefits, deductibility, all that weighs into planning. And certainly if those stay the same or expand, businesses are a lot of that capital that's sitting on the sidelines, I think, will come back rushing back in. Is just my sense.
Yeah, I mean, I would agree with that.
Okay.
You know, I think too.
You're the expert.
Well, I mean, I do think that at the same time, one of the things that we're tackling now, and this is not just us as a country, but this is the world, is what the impacts of AI are going to be on business moving forward. Yeah. Okay, and so, looking at the employment numbers, trying to decipher what from that has to do with jobs being displaced by AI, right? Or what from that has to do with the tariff policy or anything like that. I think that there's the potential here where it's hard to know, right? And one could be blamed versus another. But AI is I would say, there's a lot of benefits. There's also a lot of threats, when it comes to what that's going to do to jobs in our economy. And, that's just the reality of it. Our country's dealt with the Industrial Revolution and just, and growing out of that and creating new types of industries and jobs and really being very resilient over a long period of time. But in the short term, sometimes when you're transitioning, right, from one period to another, it's not so clear. I think that you can have some disruption that wreaks havoc. Like, you go back to the Great Depression type of time frame, and a lot of the jobs that were lost at that time, those never came back. They were displaced either because of, engines and automation, or, it was farming but in any case, our country came back and we have a much more diversified, economy today.
Sure. Well, I mean, you might even be seeing that in some of the numbers right now. UPS announced several days ago they're going to be cutting 20,000 jobs. A lot of those jobs are being animated. They're decoupling, I guess, like 15% of their total business was Amazon. They're decoupling themselves from Amazon and reorienting their whole business. And you got to think AI is playing a part in that.
It probably is. Amazon is it's probably going to be the largest transportation company in the world. At some point, it may be getting close to that. At least the effects of its business. So, I think that UPS has they've had to really be super competitive, in order to keep up there. FedEx too. Right? And then you got the Postal Service, and
that's a whole like to say that's a whole nother podcast.
Yeah, you could spend a lot of time on that, but
no one's figured that out yet.
No, but with UPS, it's not because our economy hasn't been growing, right? It's just the competitive landscape has changed, and as a company, they're responding to it, maybe automating some jobs, and trying to make sure that they, long term, that they're relevant.
Yeah.
And that they grow.
Yeah. In the transportation side, I think you're going to see a lot more of that going forward. I mean, a lot more automation. And that's just sort of the world that we're living in.
Right.
And how that affects union jobs and traditional Teamster jobs and what have you. That's going to be a big question.
It's going to be a huge question. And, automation, if you look at robotics and what's coming down the line there, there's a lot of change coming. Yeah. And how fast that comes, it'll be very interesting to see. It may happen faster than we think.
Yeah. What in this world right now, and all the data that you pour over on a given basis, what keeps you up at night?
Great question. Lately, more just the headline, cycle that we're in, and we're not used to seeing markets go down 10% and up 10%, in a matter of weeks. So, that stuff can make you lose sleep. I think I'm not necessarily losing sleep over these things, but there's concerns, and I do think that when you look at the market, some of the things that we've seen recently with the volatility, they're kind of a combination of things that are causing it. some people say, well, I think it's, China's selling treasuries and they're selling stocks and countries are selling their U.S. assets, in order to bring the capital back, and say, well, maybe there is a little bit of that, okay? But it might be more tantamount to like starting a snowball rolling down a hill, but they're not the avalanche.
Yeah.
We have, if you're familiar with the basis trade.
Yes.
And I think that in the basis trade it's trying to exploit the difference between, say, the spot price today of something and a future price using a contract or a futures contract, right? And this type of a trade has really started to proliferate again in the U.S. with hedge funds, and there's a lot of hedge funds that do this. They call them pod shops.
Yeah.
I think that part of the dislocation that we had here recently may have caused some of that to unwind. And especially in treasuries, we saw rates go up dramatically.
Pretty quickly.
Right? And I think a lot of that had to do with the basis trade, which it maybe started with international selling and then, quickly turned into something different. And that unwind can be very vicious, and it creates this lack of liquidity in the market, where prices can get moved around. They can move around and be very volatile. So,
I don't think I've heard that perspective.
Well, and it's that sort of thing does keep me up. If you think about what the potential is there.
Yeah.
Long-term capital management, which is a hedge fund that went out of business in the late 90s. They had like four Nobel laureates, and I mean, it was a great hedge fund until it blew up.
Yeah.
And had to be saved and almost took down the financial system. But they saved it, and it didn't, and we moved on. And then, almost 30 years later, now we're starting to see some of these same hedge funds do some of the same things that they were doing back then. And so, reining that in is important. I know that they're on top of that, that they're looking at those things, and they're, but that can be part of where some of that volatility came from. But here's the other thing: is that if countries were selling a lot of our treasuries or selling assets, I think about, what's the alternative, right? What is it?
Yeah.
Because it's kind of like it's TINA. Are you familiar with TINA?
No.
There is no alternative.
There is no alternative.
And when,
that's a great term.
When interest rates are super low, right, and bonds don't yield anything, they call TINA. They call it a TINA trade, where there's really no alternatives to stocks, right? When rates are super low and bonds are not paying anything, then
you put all your ducks
into stocks.
In stocks,
right? But when it comes to our treasuries and when it comes to our assets, what are the alternatives, right? And I think that's part of why we're seeing it kind of snap back a little bit now, is just because there's not really an alternative.
Yeah,
and especially if we are successful with DOGE, I mean that makes the dollar worth more, in my opinion, and it also is very beneficial to us in the form of borrowing rates, because if we have to issue less debt, then rates aren't going to skyrocket on us. It's like the Fed was lowering rates in August of last year, and up until the election, and yet rates went up almost 1% on a 10-year.
Yeah.
They went from like 3.6 to 4.5 or somewhere around there. But the reason why rates went up is because we were issuing massive amounts of debt at the same time. So.
Yeah, I mean, any 14-year-old will tell you that inflation is caused by too much money chasing too few goods, and the government plays a massive part in that. And to the extent that this government and this Congress can find its will to, continue DOGE, we're at this show a big believer in DOGE. Really have been cheering it on. Know intuitively that they've only hit the tip of the iceberg in terms of waste, fraud, and abuse. There's a lot of people within the political sphere that are scared about Medicaid cuts and Medicare cuts. If you can just address the eligibility issue within Medicare and Medicaid from a waste, fraud, and abuse standpoint, you'll solve a lot of that.
Well,
it'll work itself out very, very quickly.
I think it actually makes it safer
Yes.
for people and actually makes the programs more robust.
Yes.
And therefore they'll stay around a lot longer.
You're not stealing from grandma or some needy mother with children so that somebody who doesn't qualify can have benefits.
Right.
Cutting off benefits to people who are here illegally, I think, is a good thing. Identifying waste, fraud, and abuse across the spectrum. We're a little bit nervous right now about what's going on with the Pentagon because they want to increase their budget to about $1 trillion, but really DOGE has not gone in there and done their thing yet. And so people think the second most powerful person in the government right now might be Elon Musk, but really it's a guy named Russ Vought who runs the Office of Management and Budget. And all those DOGE folks are really ultimately going to report to him, and how we manage this budget going forward, how the 2026, 2027 budget looks is really going to be important. I mean, to your point, to on a forward-looking basis, but also how it affects the dollar, how anti-regulatory efforts affect the entire economy, along with everything else we're trying to do.
Well, I mean, there's a balancing act here, and not all government spending is bad.
Yeah.
We need to have a government that is spending money on things that are relevant to us, to help us keep the peace around the world. So defense is very important, right? So are roads, and so are, other aspects that we rely upon. And in making sure that those are more financially sound are very important to the future of our country, right? So what it just requires is, less politicization, more pragmatized, being more pragmatic about the situation that we're in. And ultimately, I think both sides coming together and realizing that, this is what's good for everyone, not just, a small few, but for everybody in the country. And here's the reason why. They got to lay it out.
Yeah,
to the American people, they have to.
Yeah, they have to do a better job of laying it
Much
out.
better. Yeah,
I mean,
both sides.
People in our position, people who dive into the journal and Market Watch and everything else. We can dissect all this on our own, but most people are they just don't. They're not paying attention to it. It's not on their radar, and rightfully so. People have lives to live. They have families to raise, but. The more that it can be explained, that's why I made the comment earlier about the Treasury Secretary, Scott Bessent, and the theme of our last podcast was, two words that define the first 100 days, Scott Bessent. Because if it wasn't for him communicating as effectively and concisely as he has, I think we'd be in a much worse shape.
He's very calm, and he's very smart. I think he understands the markets really well. It's good to have his voice there, in the administration. But one of the things that you said just now too that I think about is that you and I we spend a lot of time diving into this information. Maybe we do understand it a bit better than most, but even the information that we get. As it comes out, it's not always the most reliable.
Yes. You and I have talked about that too. That the government, and we've seen this in the past, have cooked the books in some ways.
It's tough to know,
That's been I'm speaking for myself. That's been my impression on some numbers, both on employment. Get this going back several administrations, actually, on employment numbers.
I think it might be just how they get the information, because it's antiquated. Probably needs to be updated in how they actually get relevant information about job growth and about a number of factors in the economy. But what was interesting, I think, if you go back to the previous administration, is just you and I always talk about macro data, the macro, which I love the macro part of the economy. It's the part that I like to read about the most, and that I enjoy. Which all these numbers like the GDP and all of that's in the macro.
Ladies and gentlemen, we're
Right.
Jake and I are nerds in this.
Not to nerd out. Yeah, totally, but.
We get together, we go to dinner with our wives and we nerd out and they talk about whatever they talk about, but we're talking about like politics and
Right.
economics.
Yeah, and so, when you think about how the macro data in the previous administration just didn't it didn't jive with what we were seeing in the economy, at least in our.
Yes. Yeah.
And so, part of, I think, why that was hard, and just, I always try to look back at points in time where I've been wrong on things to learn. Say, what did I learn about this? Like, how can I get better at what I do by maybe trying to identify things sooner or better? And looking back at that time, reading the macro data and seeing that, it was awful. The macros were really bad, but yet things just kept humming and the numbers kept coming out looking glorious. And you're like, well, how is that even possible? Because all the other data just doesn't read that way.
Doesn't jive.
But, I thought about this, and at least in the last couple decades, as we've had issues in the economy prop up, like in '08, right? Or even in the early 2000s, government they'd create a stimulus plan, right?
Yeah.
Some sort of a stimulus bill to stimulate the economy. And there would be this big ceremony and they'd sign in and it would go through. And then we'd start to price in what maybe the effects of that stimulus bill were.
Yeah.
Right? So it was.
They passed the bill before they read the bill, before they understood the bill. And
that's happened many times, I'm sure.
Yes.
But I guess the point is that was known, right? And it was in the news. We all knew it was happening. In Biden's administration, we didn't have that.
Yeah.
Right? What we had was just this continuous deluge of spending that just masked a lot of what we were seeing going on. And we know that because if you look at the deficit spending and what it was, the levels that it was in the last few years, it was a stimulus bill.
Yeah.
Right? And it wasn't necessarily announced or passed in the way that we've seen it done in the last 20 years. And so if you're looking at just the macro data, it's not going to tell you, oh, this massive amount of liquidity is coming in the market because we're spending trillions of dollars more than anybody thought that we were. We didn't know that.
Yeah.
Right? If we weren't, we wouldn't have grown at that rate and we wouldn't have had inflation running at the numbers that it was too.
Yeah. Yeah. There's a general consensus that has formed with regard to the Inflation Reduction Act, that it was just the Green New Deal on steroids, and it was just a big spending bill that did nothing but accelerate inflation and prop up the government.
Yeah,
and prop up the markets in some way. But really, that goes back to my other point, is that I think the goal of this administration is to flatten that curve, if not get it going in a downward direction, and get business investment, business employment, businesses back, the private sector moving again. Because the private sector, I think you can make an argument based on even just what you said, has been on the sidelines.
Yeah, with the Inflation Reduction Act, I think that it didn't really work out the way that their intentions were.
Sure.
Right, and so maybe it's design flaw, right? Let's just say, but now that we've got a different administration in, Trump 2.0, I think the deregulation that you're seeing happen, some of that probably needs to be signed into law in order to really let businesses plan long term around what the landscape looks like. Because some of these things, just on day one of say the next administration, if they don't see eye to eye with him, then they could be overturned again. And then it's like, we're in the middle of this volleyball match or this tennis match where we're like, getting bounced around everywhere. And that's not helpful from a planning standpoint.
Yes.
Right. And so, that's why I just, I think that it's really tantamount right now, very important that both sides, find common ground and kind of be pragmatic about what DOGE is doing and see it as a positive for both, right? Because really it is a positive for both if it works right,
That was one of my criticisms of one of our fair senators last week when we actually saw where Mark Kelly was, and he was at the Arizona Chamber update from Capitol Hill, and he started saying that we need to cut spending. We need to cut spending. And my pushback on that is, well, where have you been? Number one. And number two, to both of our senators, where are you with, where's the Democratic Party in general with DOGE? There's been all this criticism of DOGE, but if these sorts of, if this type of identification of, waste, fraud, or abuse within the system doesn't happen, then becomes endemic, and then you're actually going to be taking funding away from programs that you desperately need.
I haven't, I honestly didn't pay much attention to, I haven't been really paying attention to local politics here too much, just because I'm,
But to your point, in terms of working together, I mean, Senator Kelly was saying, yes, we need to work more together. And to that extent, I hope that happens.
Yeah, I think that's great.
And I think part of that is recognizing that the budget as it stands is not sustainable.
It's not, and actually
$36 trillion in debt is not sustainable.
Well, right. I mean, it kind of depends upon what the trajectory of it is moving forward.
Sure.
Right. I mean, if you got 36 trillion in debt, but our economy is very big too, and if our deficits are not, if they're
as
growing,
percentage,
if they're growing by less than the growth of our economy over time, then then that is sustainable.
Yeah.
It's not as big of a worry to me if we're growing faster than our deficits. But look, it's encouraging to me to hear that he said that. I didn't know that. But both sides, it's okay for both sides to have a win.
Yes.
Okay.
Yeah.
It is okay. And I think both sides need to start having wins together for us to be able to move on.
Yeah. No, I agree with you. We'll see if that can happen over the next several months.
I think it can. Obviously, there's going to be really vocal people on the far left and on the far right that don't want any type of agreements to be made. But in order for them to be long lasting and for us to have something that we can plan for, especially getting back to businesses and growth, and we've got to have government that's stable. Yeah.
Well, I mean, with that, what I asked you, what keeps you up at night? Well, what are some of your hopes?
Some of my hopes?
Yeah.
Well, I mean, I hope that Trump is successful.
Yeah.
Because that's good for all of us. And I hope that DOGE is successful in cutting a lot of the waste, and abuse that we've seen of government spending. That's not something that benefits, anybody really, except for the few that are getting that. And so, it makes our growth trajectory more sustainable, makes the programs that we want to pay for more sustainable, and stronger. And, my hope is that DOGE is successful in that, and that they can create laws, to.
Yeah, that Congress can go back and solidify a lot of those cuts and consolidations.
Yeah,
within the structure of the government.
And my hope is that that we have, both sides play nicer in the sandbox. We've seen a lot of things go on in this country in the last few years that it's been difficult to watch, at times. But my hope is that that we can find common ground, and that a healthy, a strong economy is a place that we can start. And I think national security is something that, is more important today, and making sure that our supply chains are protected and that are close to home or at home are important, and that they're controlled by businesses domestically, so that we don't have major disruptions, like you mentioned in pharma, or like we experienced in COVID.
Yeah.
So my hope is that we succeed in these endeavors, and that in the end it'll be more beneficial for everybody.
Yeah, and rising tide.
Yeah, it's a rising tide. It is.
Lifts all boats. Well, thank you so much for being here. Thanks for all what you're doing. And where can people find you?
Great question. My office is in Kierland, in North Scottsdale, but I've been at Baird now for 15 years. So name of my group is the Duffy Matthias Group. I've got a business partner, Dave Matthias, and we've got a great team over there at Baird. And if you need to get a hold of me, you can look us up on Baird and send us a message. We'll be happy to get back to you.
Yeah, you have a tremendous business. You're a tremendous advisor, and thank you so much for being on. And God bless.
Thank you. Thanks for having me.
All right, take care. Thanks for listening.